So in this webinar, what I'm going to be showing you is how to use pivot points and actually extract it completely using ranges so you don't have to use pivot points anymore. So let's get started. So the pivot points, right? We got R1, R2, which means resistance on top. We got S1, S2 on the bottom, which is support on the bottom. There's more levels. There's like an R3 and R4 and so on and so forth. So what these lines are doing, it's automatically calculating yesterday's movement and it's plotting it on for you today. Okay, so it takes the total movement of yesterday, gets you some average movements, and it gives it to you today. So far so good. Does that make sense? Okay, now, using that information, is the volume too low? Can everyone hear me now? Okay, I think that should be okay. I just don't want to increase the volume too hard. There's a nice lady outside screaming. I don't know if you guys can hear her, but she's like screaming out of the top of her lungs. Yeah, I think. All right, so when we're looking at these as support and resistance, what they are basically support and resistance. So we're going to do two things. First, we're going to learn pivot points, right? Then I'm going to show you how to look at it without pivot points. And then I'm going to replot them again for you. And you're going to see, do you actually need them or not? Fair enough? So we're going to have some aha moments in this webinar today. So let's do this. Now, pivot points basically are supposed to tell you areas of bounces, right? The markets are supposed to bounce. So let me take a screenshot of this so we can draw on this together. Okay, here we go. Okay. Everyone see a circle on my screen? All right. So the markets are heading upwards. They're heading upwards, but notice there's a resistance here and it didn't stop at resistance. There's a resistance here. It didn't stop at resistance. It held for a little bit, as you can see here. It bounced a little bit, but it didn't stop. And then after that, today, there's nothing. But there is a line from yesterday who, if it extends out, it tells you that this has some value. So in my previous webinars that I used to do in 2009 or 2010, something like that, for pro trading strategy, I used to talk about using your pivot points for 3 specific days. You know, day number 1, here's day number 2, okay, and then here's the day number 3, like that. And you use all the lines from these days to understand at what area can the market stop, okay? Yes, for those of you who are asking about, is this going to be available on YouTube? Yes, that is true. And going forward, any of you guys who cannot get into the room, it's because the room has a max capacity of 500. So we might max out today, which is a great thing. So congratulate to all of you guys for being here on time, because we're going to max out very soon. Okay. So far so good. Makes sense. It's going to take, it takes 3 days to find out the total movement. Okay, now I'm going to show you something quite interesting. Let's go into, let's say, Euro USD. You know, something, a pair everyone knows about. I'm going to remove this. Let's go to the current market. Okay, I'm going to make it bigger so you all can see. All right, I'm going to take a screenshot again. Okay, we're going to look at the same thing here. Look at this. Markets are going up, right? No stop here. No stop here. No stop on this one either. Okay, nothing much happens here. You got a temporary hold. And then this one, we have some sort of a stop, retraces, gets down to this same level from yesterday, or from the day before, sorry, and then it takes off again. Now, how would we know stuff like this is going to work? Isn't that the main million-dollar question? Sorry, I'm late. Okay, Prakash, you win the prize. I was waiting who's gonna say that first. So welcome. It's okay. There's no. It's okay if you're late. Everything's recorded anyways. It's okay. Yes, you're gonna have my strawberry cake. I don't know if you're on Facebook Live watching, but you can have my cake. All right. So Does Pro Trading Strategy still work? No, I don't use it. I'm sure it works. There's a lot. I've seen forums all across the internet using it, and they're built EAs and everything around it. I don't use it anymore, but I've seen it's gone. It's taken its own life. There are millions of people out there trading Pro Trading Strategy, and I don't know how they've hacked it, but they've even, yeah, it's evolved quite a bit. It even has EAs and everything. So I would look into that, where people are still trading it if you need someone to trade Pro Trading Strategy with. Okay, Fayaz, any relation to round numbers, example 0 levels? No, not really, because these things do not use psychology. They use yesterday's data. Okay, they use yesterday's data. Okay, now, so in this information, so don't we all agree the number one question is, well, how would I know it's gonna blow through this, blow through that, and come out to here, bounce from here, come all the way down to here, and then resume again? Now, isn't that an information we would all like to know? What if I give you that information today? How much better would your trading be if I give you that information today? Yeah? So let's look into this today. Let's go straight into it without wasting any time. Hold all your questions. Okay, especially if it's not related, hold that question till the end. If it's not related to pivot points, hold it till the end, or I will put you outside the classroom. So, okay, let's take a look at this. All right, now, if we're looking at these markets, now the market, sorry, I need to go onto the whiteboard. The market works in several phases. Okay, I'm gonna show you the phase here. I'm gonna open up the whiteboard. Everyone see my smiley face? Yeah, okay. So the market works in phases. Okay, there is a trend movement, there is a pullback movement, there is a trend movement, there is a pullback movement, there are channels, and then there are ranges, correct? These are the different phases. We got the trend, okay, and then we have the range. Okay, the reason why I'm showing you the range first is because the channel is exactly a range, just sideways. It's the same thing like a range, it's just sideways. Only difference is in a trend, you have this as support equals resistance, right? So you can buy it again. You have this as support equals resistance, so you can buy it again. But in a channel, it goes below support equals resistance, and we think, oh, if it's below, it must be a sell, but in actuality, it's in the channel, it's still for a buy. But we won't know that if we don't understand the different styles of the market. Correct? So everyone understand these little phases? Okay. Now, let's start with logic first. You need very important logic. This is very critical, so pay attention. Okay, this piece here, I want you to think in terms of muscle power. Let's say this is the buyer. Okay, this is the power of the buyer. This is the seller. How much, Picasso, how much buying power do we have? How much selling power do we have? No, I want you to just imagine. I'm just drawing it just randomly. Let's say I'm going to put more, sorry. There's more buyers, right? Because the trend is up for a reason. It's not a channel, it's not a range. The sellers come very little, okay? And then they go up for a buy, correct? For those of you who are not participating by typing, you guys can verbally say it out loud, but do say it out loud so you follow along, okay? All right, so we can see that there are a lot more buying pressure happening in this one. Okay, in a channel, okay, how would we say the pressure is? It's not the same, right? It's almost the same. It's more on the buyer side than it is on the seller side. Because it's still trying to go up little by little by little. Correct? Now these things mean something. These things mean something, so keep that in mind. And finally, you guys already have probably typed out the answer. In a range, what is the pressure? Okay, it's equal, sorry. There we go. Okay, I keep drawing outside the lines. I was horrible even in preschool, drawing outside the lines. Okay, so it's equal, equilibrium all over the place, right? So when we need to know this power balance, okay? I use this as a power balance. You guys can use whatever you want, but I just use this just to get an idea of, okay, that's the buyers, that's the sellers, just for a, visual representation of what's going on. Now, how many times does the market go into a range? How many times does the market go into a trend? Anyone know that information? Now, some of you guys are saying 70-30. 70 is what? Okay. Okay, so we all agree it's not equal. Majority of the time, it ranges. Less than majority of the time, it trends, correct? We don't need to know the exact numbers, but as long as we know that idea. Majority of the time, it ranges. Less than majority of the time, it trends. What are the rules for trading ranges? What's the rules? How do you trade a range? Good. Common sense knowledge, right? Sell from the top, buy from the bottom. If it's not common sense, it's going to be common sense. Don't worry. Okay, so sell from the top, buy from the bottom. Why? Because we want to use the previous points as leverage of saying, okay, markets are coming down, but it bought last time, so it's going to buy again this time. It sold last time, so it's going to sell again this time. We're using that leverage of strong sellers are sitting here, strong sellers are sitting here, strong buyers are sitting here, and strong buyers will sit here again with the possibility. Okay? So far, so good. Okay. Now, let's take this to the charts. Let's take this to the charts. The reason why I did this, there's a very important reason why I did this. Okay, I'm going to take you to the charts again. And I'll show you something cool. Okay, first webinar for you live. You're from Morocco. Welcome, welcome. Okay. All right. So let's take a look at this. Ian Clark, also from Scotland. Welcome as well. Omar, welcome. It's good. It's good to have all of you guys who are coming here live. Okay, so we're looking at these markets doing all sorts of crazy things, right? Now, if I take a few steps back, let's say I'm in June, okay, early June. I'm going to take a screenshot. Okay, can you guys spot the range here? Can you guys spot the range in here? Okay, so we go boom and boom. Okay, this one is a faker. It just comes down, comes back up. Clear? Clear. Range here, boom. Sorry, it's not purely straight lines, but you guys get the idea. Boom. Clear? Okay. Now, no range on this thing that we see currently. Okay. Sorry, I'm late. Okay. Yeah, you're gonna have a piece of the cake. Okay, so now I want you to focus on one thing now. Let's say I tell you to forget pivot points. Forget that they matter, because pivot points are also a calculation of yesterday, right? What is important are these levels. This piece, the bottom of this range extending out. The top of this range extending out. Sometimes they will coincide with your pivot points going into the future. And if they do, you know that pivot has more logic and value to it. Without that information, that pivot, I would say, is useless. Because it can't just be mathematical like that. There needs to be a reason. Yeah, they will hold more strength like that. Okay, now, if we use these same ideas and we extend them across. So let's do this. Let me go into the charts here, and I'm going to draw these lines. I'm going to remove these pivots. I'm going to put these lines in. Ta-da! Okay, so here we got one range here. I'll make this range a different color. I'll make this one, let's say, orange. Okay, nice, beautiful colors. Okay, notice because ranges are more frequent than trends, notice how often ranges are used as levels of bounce, 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 bounce. They're used much more stronger than just a generic support equals resistance and everything like that. Okay, now let's take this further into this area of when this market blows out of this area. When this market blows out of this area right here, he goes straight through, boom, 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 and he finds some sort of a halt. Now, our job is not to find where the halt is, because for us, this is an uptrend. And do we buy at the highest price? Do we want to buy when the prices are going up? No, we need a discount. We need to tell the market, give me a discount and I will buy it. Somewhere along this line, he finds some sort of a resistance and he starts to pull back. He gives you a nice red bar, right? If he gives you a pullback in this area, we need to find out, why did he stop in this area? Let's have a look. Let's have a look. Let me draw a horizontal line here. Ta-da! Okay, so black horizontal line. Let's go back and let's find out, what is that price and is it a range? Oh, come on. Let me find one quickly through the daily. It's all the way up there. Okay, here we go. Notice that this is a range here, this whole thing. It's a top of a major range here. Okay, so price is reacting from that. Okay, so we don't care if it reacts from that. Our job is to buy it. We're not caught up in the daily. We're still on the 4 hours, and the 4 hours says buy, we buy. Okay, this is a daily chart. It's a big, big, big movement. It's a big range, and it's bouncing off of that. And we're like, fair enough. I understand why it's bouncing on my chart. So on the 4 hours, you're looking at this bounce, and you're like, I know why you're bouncing. Fair enough. Where can it bounce to? Where can it bounce to? Now that becomes the next question, is what is my nearest range that can hold this? Okay, now you have this range as a point of reference, right? If I even smooth up the exactness of it, you have this range as a point of reference. Okay, you're like, maybe it can come down to the top of this range, or if I find something sooner, I can find something else. But as from the closest market, this seems to be the range, and this top of the range seems to be 40% pullback. The bottom of the range seems to be like a 60-70% pullback. Looking at how strong the up move is happening, I believe it won't pull back to the bottom purple line or these orange lines, but rather the upper one. However, I need to confirm that. I need to confirm that. So the way to confirm that is, now I go down to the 1 hour and I first monitor what kind of reaction am I getting off of this thing. Okay, get a strong move down, bounces a bit, strong move down. Would we say everyone activates a sell at this moment? Panic kicks in. Everyone's like, oh my God, sell, 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 sell. Okay, we got no higher high sequence coming in. And then the first move down. Now, generally, the first move down it's a panic. It's not a sell. I'm going to explain to you why. Look, once the first movement down here, the first red bar, does anyone know it's a sell? No. When the next movement down happens, does anyone know it's a sell? Also no, it's panic right now. It's as if you suddenly stepped out in front of a car that's driving at 100 miles per hour, you freeze. You don't know what to do. So even in the second stage, people freeze. They don't know what to do. It's only in the next move down is when they start to take action. Enough time needs to pass by for them to take action to say, okay, it's a sell. Because they have to follow it. Okay? So it's still not a sell yet. So this isn't a trade we can trade from, because once this trade goes all the way back up, and you might even say, well, this is a complete turnaround of the market or an exhaustion candle, right? because this is like a probe now. It's just a railroad tracks, a fast move down, fast move up. It's almost like this move down never happened. So we might be thinking, well, we can buy this, but the problem is we are now buying it at the top of a range. Okay? This is why inside your pivot points, I missed it. Yeah, this is why inside your pivot points, that area becomes very crucial to us and saying like, well, that resistance is important. We can't just ignore it. Okay, this pivot point is coming from here. Look at this. Look how far away this pivot point is. Now the buy does end up going a slightly higher, but there is some danger to it. Okay, let's take a look at another example. Let's take a look at another example where this thing will get a little bit much more clearer. Okay, let's open up Aussie, New Zealand, let's say. Okay, so we're in Aussie, New Zealand. All right. Can we spot the ranges in this chart? Got one here. Okay, got one there. Got one here. Okay, so we got some ranges in here. Now, in this movement, if we take a look at this now based on the 4 hours, the 4 hours got its own kinds of ranges. Right? He has his own range down here. We got something up here that's holding up. Okay, and prices like to bounce from these areas. Now, why does prices bounce from these ranges? Now, let's answer that question first. Why do prices bounce from these ranges? There was power there. People remember those powers. Okay, let me give you an idea. Okay, I'm gonna give you a quick example of why people why ranges work to react again. Here, I'm gonna take a screenshot real quick. Okay, I'm gonna draw a circle. Let me know when you see it. Okay, now prices went up to here. Prices are rising, right? They're going up. Boom, 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 boom. They're going up. So now your apple that you buy in the store that used to be $1 now went up to $2. Okay, the same apple went up to $2. You're watching it and you're like, oh man, this apple. Come on, I want to buy this freaking apple. Everyone's buying the apple. That's the reason why prices are going up, because everyone's buying the apple. Right? So you're like, I want this apple too. Now prices start to drop a little bit and you're like, oh, the apple went down to $1.50. And you're like, oh great, it's on a discount. Maybe it's gonna go more. Maybe it's gonna go more. That maybe idea is so dangerous. Maybe it's gonna go more, and then it goes up. Boom. Back to $2. Back to 1.5 area. And then after 1.5, where does he go? Back to $2, and then from $2, he goes straight up to $5. Now, when you're watching it, the price go from $2 to $1.50, $2, $1.50, $2, $1.50, and then suddenly from $2, $5. Will you remember that in your life? Or at least in the near future? You are going to remember that. I don't know if you guys like apples like that, but let's just replace the apples with any product. You will remember that, any product that you like. Because you're watching it, you're looking for a time to buy it. A banana. So you're looking at it, and then $5 happens, but once the $5 comes back down, and then it comes down again, and then you see a price of $2 one more time at $2, what's going to happen? You're going to tell all your friends, hey man, I was there last year when price was at $2 and it jumped to $5. If you do not buy now, you're never going to get this price ever again. I promise you. The whole market goes into that idea of, remember last time? Remember last time? This is why markets react very heavily from the breakouts of these ranges. Does that make sense? Okay. Now, yeah, exactly. It's like a holiday sale. Now, how do you know what's a good price? You don't know what's a good price until you see the price change. You didn't make the price, so you don't know what is a good price. All you know is, oh, I know the price was this price, and then the price changed, so it must be good. That's the only thing you can judge by. You don't actually know the price. Is the sound gone? Okay, give me a second. Okay. Let's see if this works. Okay, so far so good. Okay. Here we go. I'm going to draw a circle. Perfect, perfect. Okay, so does everyone understand the reason why the power of these ranges are important? Because once it breaks out of that range, the longer it spends time in that range, the more people will remember that price. Okay, and then once it breaks from that range, the further it goes, people will be like, oh yeah, I remember that price. Yeah. So yeah, a range is basically your support on top and then your support on bottom and resistance on top. But be sure to cut out any stuff like this. Okay, this is no higher high. So is this. This is no higher high. It's just a tail. Even this is a tail. It's just really quick up, really quick down. Okay. All right. So now in this particular sequence, we see prices reacting off of this high. Okay. Or it's reacting off of that high. And we're like, oh, good. We're 4-hour traders. It bounced off of there. Well, is it going to stop here? No. He keeps coming down and down and down and down. Now, he makes his own little range, but let's say we didn't see that own little range that it was making live. Okay? Let's say the market is like this. Sorry, bad one. Fill it like this. Okay, let's say the market's like this. It's coming down. Now, we don't know it's going to make a range, right? All we know is, well, where's it going to? Where is it going to? Now, not just where is it going to, is can I justify the movement? Can I justify the movement? So we need to start looking at that very closely. So markets are going down. Anyone who bought here, are they scared? They bought there, they bought there, they bought there. These guys are chasing the market. They bought there. Yeah, so they're worried, but some of them are still in profit. Okay, some of them poop status. Some of them are still in profit, so they're not so concerned, right? They're like, yeah, it's okay. It's not a big deal. I'll get through it. I'll get through it. Then, okay, then we have a slight reaction up, and they're like, oh, told you I'm safe. But it doesn't go up much higher. It instantly comes down in the next candle. Now there's panic. Okay? There's panic in the market. They're like, oh my God, what am I gonna do now? What if it goes down? What if it goes down? Okay, what happens when you have fear? If you have fear, you will paint tomorrow automatically. Okay, just learn from the news. If you have fear, you suddenly draw a picture of what tomorrow might be. Correct? That's what fear does. It makes us paint tomorrow as if we are God and we know what's going to happen. We don't know what's going to happen. Right? So once this happens, there's fear like, oh my God, if it goes down, I'm dead. And as soon as this happens, the market does go down. Now the panic becomes reality And in this reality, everyone turns seller. We're watching this area as, hey, remember that range? Remember that $5 apple turning back into $2? Let's see if it does something here, and then we'll figure it out. Okay? We're using this knowledge of we're using memories. Okay? Let's use this information to see if something happened. We're not gonna hit the buy. We're not supply and demand traders. We need logic, we need reason. We can't just hit a buy blindly. Right? Otherwise we would have hit a sell blindly from here, and you know how that turned out. Okay, we need to know what this means. So as we're watching this, we have few pieces of information. Let me clean all this up for you guys. We have few pieces of information. Anyone who was buying has just been stopped out, and not just stopped out, they might even turn sellers. Okay, so there's a lot of people's money going short now because enough time has passed, enough momentum has happened to make sure everyone sells whatever they have. Okay? Now, these things turn right back around, right up to there. Okay, whatever the sellers were doing, the buyers took it all the way back. Let's take a look at this again on the 1 hour. Okay, we're gonna go into a little bit of precision. Here we are. Now, okay, yeah, V formation, right? So whatever the sellers were doing, notice how the sellers are moving down. Notice how the buyers are moving up. Would you say the sellers are struggling? Do you see any buyers on the way down? Yeah, there's some aggressive green candles in there. Okay, what about on the way up? Do you see sellers coming back? There's no sellers. There's like very few sellers. They're super weak. That means, are the sellers throwing away the ball? Knowing that everyone's still stuck down here, all their money is being screwed over, there's no one there. So we're now watching for is stage 2. Stage 2 is, in this process, on the 60, we yet have another range, do we not? This range popped out from here and held, popped out, came down. This is what we call a test. Okay? This is what we call a test. A test is coming in the final stages, the final stages. It's coming in and we're like, oh, look at the seller. It must be going back down. He doesn't go back down because he bounces off the top of that range. What happens to him once he bounces off the top of the range? Does he come down? No. So that's clue number 1. Okay, that's interesting. He's not coming down. What's going on? He pops out of the range. Like, okay, why is he doing that? Then he bounces back down and holds above the range for 3 hours. You have all the information. This is the main key. Okay, we're going to call this the main key. Okay, this is the main key. This is the secondary key. Okay? You only use the secondary key when you start to realize everyone who was a buyer is now screwed. Okay? You start to see the secondary key and you're like, excellent. Now I'm going to use the secondary key to find out exactly where do I need to get in. Okay? When you use these pieces of information together, notice when you get into here, how much of a loss do you have before the trade goes into profit? How much does the trade mess with you? And where do you think you would put your stop loss? You know, you still need a stop loss, right? Yeah, below that range. Because now it's more logical. There's a reason why if price goes below that range, well, every time prices come near the range, it bounces up. So just for the sake of safety, I can put my stop loss below here But to be even more safe, I'm going to put my stop loss below here. Now, do you guys understand, for those of you who are in the elite community, why I put my stop losses so tight sometimes? Because I see an opportunity to turn this 1R trade from 1R or 100% up to 700% in a single trade. Does that make sense? Yeah, so your ranges, which everyone's afraid of, the ranges that everyone is afraid of, is actually very useful. It's actually very, very useful. Okay, so you might think the trend is your friend. Well, I think the range is your friend, man. Because the ranges happen more often, and if it happens more often, then you need to listen to the ranges and learn to use them. They're very, very important. Now, shall we use all this information on pivot points? And now I want you guys to tell me at what point are pivot points necessary. Okay, everyone with me so far? Okay, look at this area. There's a pivot line right here coming in from yesterday. This pivot line extends out to there. Now, isn't a pivot line very similar to our range lines? Our range line was basically saying, as long as price is above this range, we're okay for a buy. Can you make the pivot color blue? Yeah, sure. 1 second. Sorry about that. Let me delete everything, and that way I can show you the pivots. Make it blue. I'll make everything blue, yeah, so you guys can just see all the lines completely. Okay, I think that should be enough. And let me go to the 4 hours so you guys can see multiple lines. Oh, come on. Don't tell me I didn't save it blue. 1 second, sorry. Blue, and one more blue, and we're good to go. There we go. Good. Screenshot. So, here we go. So, here is a pivot line right here where our buy is happening, and that's the bottom of that pivot line, or that's reacting from the opposite side of the resistance. But notice, there's another line right here coming in from the day before, and that also holds true. Remember the 3 days logic? But now there's also another pivot point here which hit that guy down for a sell prior to the blast off. So you know there's absolutely no hurry to enter the trade earlier unless you bounce off of this first level, let it come down, give you a nice test, show you, prove to you that it cannot go down anymore, and then you hit a buy. This way you have a proper trading system and you're not blindly trading anything. Yeah, those of you guys who know the test from the 4-course bundle in the timing section, you guys will know this. Okay. Billy, when do you draw ranges? Which time frame? It depends which time frame do you want to trade. So for example, in this time frame, we're looking at the 4 hours and 60, right? Because we can actually see the 4 hours making moves. You know, it's causing people to get into the sell side and all that stuff. So we're using the 4 hours and 60 for precision. Okay, so the overall flow of this 4 hours is in an uptrend, or what we call buyer's territory. And as it pulls back, as long as it's above here, it's still a buyer's market for us. Okay, but unfortunately, you know, the public doesn't see it like that, right? They see it as a sell after a certain stage. And that sell is our biggest friend. The buy entry, it's right here. So I want you to use this information. It's very, very critical. We go over a lot of these techniques. Now, before, if this technique was useful to you, you know, we've released the Mastering Price Action. How many of you guys actually have the Mastering Price Action course already? Yeah? How many of you guys do not have it? Do not have the Mastering Price Action course? Okay, so those of you who do not have it, you guys can see live feedback from these students who actually have it, that they're extremely happy with it. Oh, some of you guys have already graduated. Good, 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 good. It's very, very powerful. It used to be a course that I designed for my one-on-one students. It's a $6,000 course. And this is something we were talking in management for a long time, that we need to do something different. We want to change the way we approach the market, because we want to help people as much as we can. So that's why we made this course more open to the general public, and we made it a lot more affordable. So the price now is at $249, and it is available for you guys to pick up today. We have started to accept the next wave of people to come in. So here we go, right there. I will get you guys the link right here. It will open it up on your screens. And you guys can pick it up today and get started immediately. It's a 7-week course. And basically this course releases every week to you, week by week, going over a lot of the major important topics. And with this information, and you use the webinars and stuff like that, we also have private webinars for MPA students. In fact, some of which we're going to be doing in, I would say, in a week and a half's time. Okay, so those of you who are in the MPA already, in the Mastering Price Action course, get ready to receive an email from me, because we're doing a private webinar soon to go over some really good stuff. Okay, so all of you guys who are already in the Mastering Price Action course, be prepared for a private webinar soon. Okay, all the 4CB students are allowed to come as well, but it's going to be great. It's going to be great. So, a lot of you guys have noticed we have raised the price on the Mastering Price Action course, and we're looking to raise it again soon as the demand keeps going higher, and we have to raise the price as we don't have enough amount of staff to cater to you guys. So we will be raising the prices very, very soon again. So you guys can pick up the Mastering Price Action course today, and I want to see all of you guys in the course doing well, breaking through the barriers, and taking your trading to the next level. If you guys had some aha moments today, let me know. How many ahas did we get today? How much information did you feel that, oh, I never saw that before? You know, it's very important. The ranges are looked down upon in the market because they're so messy. They're not easy to read, right? They're looked down upon, but ranges are actually fantastic. And the reason why I named this webinar Pivot Points is because pivot points have a better reputation than ranges, and it gets everyone to come in here, and at least I can use it as a backdoor to talk about pivot points and then saying, you don't need pivot points. You see? So I really wanted to, you know, it's like I'm calling in Brad Pitt and saying, yeah, I don't need you anymore. Yeah, goodbye. It's like, yeah, so pivot points are great. I'm happy whoever made it. It's great, but there is missing links and pieces to it. So I'm glad all of you guys are here. Thank you for coming. This is all the time we have for today. Any questions? Any questions? Let's go over some questions. Anything you guys want to ask me? Okay, let's see here. How's it different from SNR, ranges, boundary, SNR, so pivot, a resistance, same thing? No, it's much different, because when you're dealing with ranges, if you know how to use ranges properly based on your time frames, they become a hotspot. Because pivots are going to give you multiple areas. You don't want to use all of them. You want to know which ones are going to be more useful, right? So if you have that information ahead of time, it can become very, very powerful. Adnan, I can see you're giving my email address away to people. But that's okay. Yeah, if you guys need to reach out to me, naveen@urbanforex.com is my email. If you need to get a hold of me, if you want to talk to Armo, Lucille, or Robert, info@urbanforex.com is the fastest way to reach them. Otherwise, we're also available on Facebook and Twitter as well. So our support is available in all areas. Yes, it is recorded, and we had some drops in between. I apologize for that. And how many of you guys, okay, so after this place, we will be traveling to Hong Kong next week. How many of you guys are in Hong Kong? If also in a week and a half to 2 weeks, we'll be back in Malaysia. And then we'll also be coming to Singapore, actually. Cake. We'll be coming into Singapore as well. So keep, stay on top of my Facebook page or in our emails. We'll send them out as these announcements. I would love to meet you guys in person. I want to see more of you guys in person. It'll be great. We can eat cake together, have some champagne together, and it'll be fantastic. Do you use fractals to identify ranges? No, I do not use fractals. When will the webinar be available online? Within 24 hours, the recording will be released. Can everyone still hear me? So yeah, I would be looking forward to catching up with all of you guys in person. And more than that, I really want all of you guys to push through. I'm coming back to Maldives, Fayaz. I'll be there once the weather starts getting better again. It's raining right now. I'll be back in Maldives. But I really want all of you guys to push further, break through, and travel with me. Trade with me, travel with me. It's going to be awesome. You know, we'll have a good time. We'll travel around. We'll pick up traders as we go. And, you know, we'll see what the world has to offer. So... Yusuf, Indonesia, I come to Bali very frequently, so I'll be in Bali again once the weather gets better. I believe it's raining as well, so for this summer I'm going to Europe, but Malaysia I'm coming back next week. I think I'll be back in Langkawi again. Yes, the course helps with commodities and futures as well. Okay. Australia, I just need to apply for my visa to come to Australia. I should be able to get that done very soon. I will be going to New Zealand for sure, as some of our students are living in New Zealand, so we'll have to go there and meet them. But yeah, Germany is coming up in 1.5 months. Okay. How long did the core basics last? Core basics is 4 weeks. Yeah, it's a 4-week course for the core basics. So core basics is a very strong supplementary course to the mastering price action. It goes hand in hand together with the mastering price action. Alone, it won't be as useful as it is with the mastering price action. So it's quite powerful as well. Okay. So again, for those of you guys who already have the mastering price action course, look out for my email. We will be doing a private mastering price action webinar very, very soon. Okay. So that's all the time we have for today, guys. Thank you all for attending. It's always a pleasure to have you guys here. I know you guys take out time for yourselves to be here from work or from, and it's a holiday for a lot of you guys in the US, so happy 4th of July as well. And I look forward to seeing you guys in the next webinar in 2 weeks' time. I'll see you guys soon. Again, if you need to reach out to me, Naveen@urbanforex.com. Cheers. Thanks, guys. Have a nice day. Bye for now.